Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. Hey there, this is Tim. I want to thank you for dropping by to watch this interview. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another follow-up interview with the CEO, one of my favorites, offensive lineman, former offensive lineman. That you've been busy, man, huh?
Yeah,
a little bit.
Hey Tim, it's good to be back, and hey, I'm going to take issue with that. I go out of my way right now. I kill myself at night in the gym to make sure people don't guess that I was an offensive lineman. You know, I want them to say, "Wait, you're a linebacker, right?" So, you know, when you're playing the linemen are my favorite guys, but when you're an ex footballer, you don't want to be, "Hey, offensive lineman, right?" Like, crap. No, good to be back. Hey man, but we are hustling. Yeah, it's extremely exciting here at Surgepays. You know, we're just over a year in on NASDAQ now, and man, we plowing through some things. We've checked some big milestones off that we had laid out. So it's getting pretty fun right now.
So let's back it up for a second. So Surgepays is the company, and you are helping the underbanked, right? Find actually you're doing a whole bunch of things. But you are helping people that don't have access to broadband, right? Get that access. And you're also helping little independent community convenience stores, right? You're building relationships. I mean, this is a lot deeper than just that. Just hey, we're hooking people up with, you know, laptop or not laptops, but tablets, right? There's a whole really deep thing going on here. Would you agree with that?
Yeah, I'd agree with that, and maybe add a little bit of color. You know, my background for the past 20 years has been providing financial services and primarily telecom services to the underbanked, underserved, people without credit, those who are getting the prepaid companies out there, TracFone, Metro PCS, you know, those other folks, they don't have credit cards or checking accounts, so they have to pay cash somewhere. So that was, again, going back 20 years to prepaid home telephone, then in wireless around 2010, when we switched over from copper to wireless, and then kept the same ball game going. But our target market is that underbanked market, living in underserved communities. And the best way we have found to distribute products and services to them is that community store, corner store, convenience store, bodega, that store that folks can walk to or right around the corner, right in their neighborhood.
Okay. And the ticker symbol, which is listed on the NASDAQ, which is another recent accomplishment. But I mean, there's a lot of accomplishments because if I go back, I think you had 13 states. That's all you were able to sell in at the time, right? That's changed significantly because you did an acquisition, right? And you couldn't talk about it back then, but now, right, that's completed, and the uplist to the NASDAQ is completed. And you just had another big announcement where you did and in this environment, it's kind of a big deal because it's a financing deal that was non-dilutive, right? That puts you guys in a pretty good position. Ticker symbol, by the way, is SURG. And this is Brian Cox, by the way. I want to make sure everybody knows who it is. CEO. Thanks for coming in, Brian. But a lot of stuff I just threw out, right? In a very short period of time.
I want to give a little foundation on that. And I can go right into the financing because I think that's probably, outside of achieving the listing on NASDAQ, I think that's been the single most important. And I actually would say from a business perspective, from a revenue perspective, and from executing the plan, more important than achieving a NASDAQ listing. But to go back to what you're talking about, we had 13 or 14 states in which we were licensed by the FCC to provide subsidized internet access or wireless broadband. And that came about during COVID when a lot of the lower income or inner city folks were not showing up for the homework or the Zoom classrooms, and they were completely boxed out. So the government set aside about $15 billion for starters to get this program going. We were one of the pre-approved companies, licensed in 14 states. And then we acquired another company that gave us all 50 states once we realized what we had here. I mean, once this land rush, gold rush, where almost a third of the country qualified for this subsidized program. And you qualify simply by being on any other government subsidy, whether it's Section 8, food stamps, EBT, SSI, veterans pension, WIC. So immigrants qualify as well. So about a third of the country qualified. So we started looking at our growth, and it's the first time in 20 years where, I was an economics major. It was the first time in 20 years where my numbers at the end of the month were not supply and demand, the price, and all the factors. It was how many devices could we get our hands on, and that was our sales for the month. And we were running out of devices about week 3 of every month. So my big challenge was no longer getting to NASDAQ. Check, we did that. It wasn't all these other functions of business. It was like, how do I get access to capital in a model where we get reimbursed 30, 60 days later from the from the government, from the FCC? How do I access capital without diluting my shareholders? Because I am the largest shareholder, which is probably something we should always tell on the front end. We have a laser focus model here of protecting our, putting a moat around our cap table and protecting the company while growing as fast as we possibly can. Because I don't want to mom and pop growth this. I'm not looking for 3 to 5% a year. I'm not a blue chip. So with that said, we looked at, God, Tim, I evaluated term sheets this thick, the OIDs, the coupons, convertibility. No, we won't convert. No, this, no, that. And I never could find anything. So finally, I kind of threw it all in the garbage. And I told my CFO, we're going to find something. I'm going to map it out. We're going to build something that we're going to go find it. There has to be people. We're growing a receivable from the United States. We have assets, which are tablets in the millions of dollars. Our receivables now is in the millions of dollars. We have to be able to access capital traditionally without using anything. We're on NASDAQ. That's great. But I do not want to use a public company tool, because where we are right now, even though we're in the top 5 companies performing on NASDAQ this year, I believe, something like that. I'm not happy with where we are. It's nowhere near where we should be. And I'm not selling stock to gain access to capital. So yeah, we pulled off a financing that allows us to have an initial drawdown based off of the receivable from the United States, which is right at about 10 million a month right now, and still growing every month. And also our assets, which would be the tablet devices that we have purchased and are in our inventory. So our first pull down was 15 million bucks. And what we did with that, we paid down a high interest loan, which is something I used to protect. I wasn't willing to sell stock. So I got a short-term loan to buy devices to prove out the model, to get the receivables up, and then use the receivables to leverage an economic below 10% type line of credit. And what's really cool about this is when I say it's built specifically for this model. So we pull down, use real numbers. We pull down about 15 million bucks, and we get paid every month as a subsidy for providing services to these lower income folks. Well, that 15 million is divided by 9 and paid back in 9 monthly installments. So it works perfectly with our model. It allows us to, continue to cash flow growth. And then it allows me to grow my borrowing base, where now I can pull down more money as we grow. So I'm incentivized, more customers, more revenue, more access to capital. With that access to capital, I can get more devices, more customers, more revenue, more access to capital. So we've already been approved up to $25 million. So we don't even have to go back through document process or credit process to get access to another 10. That was another prerequisite that I put in place. I did not want to get throttled, after this initial jump, and wanted to be able to keep going. And the cool thing about it is once we've pulled down that 25 million, the money from the reoccurring revenue, and just to make sure everybody knows, we get an upfront payment for enrolling a customer in the program, and then we get $30 every month. And of that $30, my margin is about half of that, so about 15 bucks. So, it's reoccurring every month for providing internet access through wireless mobile broadband to this customer base. So, as the customers grow, the reoccurring revenue grows, our borrowing base grows. So it's really a hand-in-hand model where everyone is incentivized for us to grow our base. So it's a really cool, and again, not a single shred of stock, not a warrant, nothing to do with the public company side was used or leveraged in attaining this financing.
And so let's talk about that. How many shares do you guys currently have outstanding, fully diluted?
Now, fully diluted, if you took the warrants and put those out there, I think it's ballpark 17 million. I believe actually right now there's about 14 million. And I think we've got a hair over 6 million in the float.
Okay, so yeah, so 6 million shares in the float. And you're the largest shareholder, right?
I think about 27-28% of the company. Yes.
Right. So, the combination of small float and high growth can be pretty exciting, right? Because what does that mean? It means there's not a whole bunch of shares out there. And if people want to buy them, there's only one way to get them. And that's to pay up for them, right? I mean, that's pretty much it. So if you have, not a whole lot of supply and a whole bunch of demand, the natural thing that happens is things get a little pricey, or can get a little pricey. And we're going to go over the chart in a little bit here, but the chart is also into, so you got fundamental things that are going on that are very encouraging, like getting this financing done and passing 200,000 subscribers. Is that accurate?
Yeah, we had initially put out a guidance goal of 200,000 for the year. And I believe we announced about 30 to 45 days ago that we had eclipsed 200,000 subscribers already.
So things seem to be working out there, right?
Yeah. And hey, by the way, Tim, that was before anything to do with the financing. That was on I call it that red line growth model, where we're basically taking every penny in the company, throwing it into devices, covering commissions, and then holding our breath. And then, okay, boom, here's our payment for providing that service. Rinse, repeat, rinse, repeat. And yeah, we exceeded our goal for the year by a quarter.
Which is pretty damn impressive in a environment like this, right? I'm going to go back to people seem to easily forget. We just came out of a pandemic, which doesn't happen very often. Matter of fact, I'm pretty sure it only happened once in my life. And now we're in a war and we've got supply chain issues and all kinds of other stuff going on. And you have managed to uplist to the NASDAQ, which is impressive, not blow up the cap table, and you don't have a bloated share count, right? I mean, and it appears as though revenues are growing, right?
Yeah, they're growing exponentially. And I think to paint a picture of my approach to this, I don't know everything there is to know about public company raising capital or maneuvers, because I'm not a public company. Let's just call it a card shark, if you will. My background has always been making money in private. Done almost $1 billion in business in private business. So I set out every day to make more money than we made yesterday and to have more money in the checking account than we had yesterday. So it's a different mentality where I'm not looking, you talk about bloated share counts and playing all these algebraic Pythagorean theorem numbers, like if we can outpace our dilution that's just not me. Now we will, obviously use our stock as currency to tender for acquisitions that make sense in the future. But with us growing, I mean, we grew 2.5x revenue in Q3 without the capital in this crazy environment. And we did it. Why in the world would I go out and start buying companies? I don't need to buy revenue. And the cool thing about our model is, while I do have a front loaded expense cost per acquisition for a customer, if I turn the lights off today, and I know a lot of people have heard me say this, but it bears saying, our customer base alone would provide us probably somewhere ballpark 3 to 3.5 million in profit a month if I turn the lights off and just said everybody go home until after New Year's Day. Just take December off. But we're pouring that money back into reinvesting to a front-loaded expense model that just keeps churning and keeps that revenue grinding up. So, any expenses or EBITDA loss, a lot of our reporting isn't necessarily transparent to the fact of how our business is growing and how we're doing from a cash flow perspective.
Right. So, okay, let's now that you've got this thing behind you, what are you gonna do with the money? I mean, what is it that you're excited about now? Well, what does it enable you to do?
Yeah, well, right out of the gate, we were able to take out an expensive loan, about $5 million that we took off the books. I have a personal goal. Again, I'm not putting guidance out there, but I have a personal goal by the end of Q2 to be one of the only, if not the only, profitable and debt-free micro caps out there, because I believe that's how we get off the micro cap classification and move into small caps. It's a clear path now. It's absolutely a clear path. Most of the remaining debt is me. The money that I put in personally, we talked the first time, I put in over 7 million to help us get to NASDAQ. There's still about 5.5 outstanding. We look to take care of that over the next year and, clean up everything where there won't be any preferred, there won't be any, let's call it unstrategic debt. If there's strategic debt through lines of credit, whatever, that's different, but there won't be any debt related to that. And so I think that, and that was, one of the other components I didn't mention earlier about the financing, because it's an installment payment, it's a short-term liability. So it's not GAAP debt. So, we're able to eliminate debt while growing the company. And so we buy devices with the remaining cash. We put them in the hands of customers. Again, there's almost 100 million customers out there that we can go after. The program's only a year old. We got numbers from the FCC where they feel like there's only a 25% penetration of the potential customers out there. As a matter of fact, the FCC just issued $90 million in grants to companies, not actually the providing companies, but to companies to create awareness of this subsidized mobile broadband product. So they're definitely interested in the long-term success of the program. But man, we're going to grow, put this money in strategically to buy devices, pay commissions, and keep growing exponentially. And, we know what the numbers are. I should say, I know what the numbers are. at 500,000 subscribers. Again, very simple math, 500,000, $30 a month. I got, the cost to provide, it's about half of that. You do the simple math, you can see what we would be banging out a month in revenue. You can see what we would be, allocate anywhere from 650 to, let's go really high, to $1 million in G&A. And you can see what we'll be doing a month, and go back and look at our cap table, the earnings per share. Gets pretty crazy pretty fast. So, my focus right now is to get us to 500,000 subscribers as fast as I can, keep the share count where it is. And then bluntly, as soon as we hit 500,000 subscribers, it's going to immediately flip to focusing on getting 1 million subscribers. It's always going to be that next number to go out. Every time you reach a milestone, you kind of look behind you and go, okay, how can we increase margins? How can we increase retention? And what can we do better to maximize our sales, referrals, other ways to increase sales? And every bead of sweat you drop, how do we get more dollars from that bead of sweat? So that's kind of my business philosophy that I think ties in uniquely with the public company world, and where I lack maybe some of the tool knowledge of public companies. Those are the people that I'm hiring now to surround me with the knowledge and wisdom and experience. And I bring my team of executing business plans in the real world, actually making real money, scaling real companies. So I think that's why this has been a really cool marriage of private company, public company, and then putting them together to maximize the synergy.
I would say that is definitely happening, right? So let's talk about the convenience store thing, that whole angle for a second, right? It's not just, it gives you the ability to offer the convenience store an opportunity to bring in products that you're not warehousing, you don't manufacture, but you can provide it to them because of the relationships that you have with distributors and vendors, right?
Yeah, and the relationships we have with the store is unique, and I'll put a coat of paint on that. We engage these stores and we pay them, and they make commissions off of doing transactions at the cash register. Those transactions consist of anything from doing top-ups for prepaid companies. That would be TracFone, Boost, Metro, PCS, Cricket. Anybody that has those can go to our, any store that's on our network, make that payment at the register, and that clerk does the transaction. That store makes money. One of the big boosts to growing our store network is the recent integration of ACP. So now that clerk at the store can initiate an enrollment. So that customer, if that customer walks in, they pull out that EBT card to pay for, a Red Bull, whatever, bag of chips. That clerk can simply say, hey, Mr. Tim, I can hook you up with a tablet and free service, right? Internet service. Want to go and give me your mobile number? I'll get you set up. Well, that's all it takes for that clerk to initiate the enrollment. And then we take the baton from there, enroll that customer. We pay the store for that, just that initial engagement. And then now that store is going to get a residual payment. So we've got a phenomenal relationship with that store, providing them these products to sell with no inventory, these financial and underbanked products for that underserved market. Well, now we go back to that store, that same platform that they're using it. And, when I say platform, if the store does not have internet, we have a reprogrammed Verifone point of sale terminal. It looks like the old credit card machines, that you would swipe. Well, we actually use the menu on there and the numbers to have a menu driven transaction box, if you will. So we can take payments through that box. We can do all kinds of fintech and telecom and financial service transactions through that point of sale box on that Verifone terminal, or which we prefer is a computer. And a lot of the convenience stores now have computers and laptops or desktops up at the register. We've got an app that they can use, kind of a what you see is what you get app. It's got the push buttons where they can click. They can, like I said, initiate an ACP enrollment for that mobile broadband customer. They can take payments. But now that I've got that relationship with that store, we have other products, physical products, consumable products that we can sell to that store. That you're absolutely right. We don't warehouse. We're almost like a middleman fintech broker to introduce that store, to give them access to these products, whether it's CBD products or personal safety products. There's all kinds of products that we're looking at right now. I'm actually going to hire somebody in the next week to be over our product procurement. And those would be products that would just be, we're going to build on that relationship we have with the store. Again, we walked in the store, we're helping them make money by helping their customers. Then we come back and go, oh, by the way, we have some fantastic products here that are a great price. You may not have access to it with the local, your 18-wheeler that drives around and services you all your chips and your other products. We think we can get you a better deal, ship it direct from the manufacturer. We handle all the transactions and what have you. So Surgepays makes additional revenue, additional margin, and additional sales. And we've enhanced our ability to provide cool products to this underserved market.
Yeah, you've strengthened the relationship with the store owner, right? So makes you very sticky, I would think, because you're more than just a provider of phone service. I mean, you're fintech. You've got, one time we were talking about, do you still do the gift cards, that kind of stuff?
Yeah, still do the gift cards, and that's well, see, these things are all, let's just call it, the gift card's kind of an ego play for the store owner, because, they see Walgreens, CVS, 7-Eleven, Circle K, the big giants that all have gift cards. And, it doesn't matter how much money you have. Nobody has any idea what to get somebody for their birthday or Father's Day or Mother's Day anymore. So they still use gift cards. It's not a huge margin play. It's really more of a Trojan horse to get the store and just provide them other products that keep competitors out of the building, so to speak. But we still do gift cards. It's again, it's a good visual when you walk in. When you walk in and keep in mind too, my background is in sales. I started my first company pulling thousands of convenience store doors, every ethnicity, all throughout the Southeast, man. I've been in every type of store you could imagine. And, you've got a matter of seconds to pique that clerk or store owner's interest, and then to get them to sign on. Because remember, we're in their checking account. We're ACHing them, weekly, daily in some cases. So there's a lot of trust there. We got to be a profit partner. So when you can come in and say, hey, that sign on the door that says y'all take EBT SNAP, hey, every customer that comes in here and uses that SNAP card, that EBT card, you can hook them up with free internet and a tablet, and we'll pay you to do it, and you get residuals every month. And oh, by the way, you also can, check out this gift card rack if you want to offer gift cards to your community. We also have the ability for you to take payments for all the prepaid wireless companies out there. There's also other payments and things that you can do. There's apps that customers can go in, like Amazon, and pay direct and load value direct on their app. All these guys in here that don't have credit cards, you can be that quasi bank for the underbanked. So that's the sales pitch now, which becomes less of a sales pitch and more of a setup pitch. Because when, if I'm not asking you for any money, I'm not selling you anything. But then I show you how you can make money and help those people and they really do. They do appreciate their customers. I think there's, I don't know that people ever fully realize that convenience store owner, his livelihood is built around taking care. He loves those customers, his neighborhood. I mean, I've had guys that would tell me they'd take some products and not even make a dime off of it just to provide those services for the folks in their neighborhood. So they really do genuinely care about their community, and it's a great point of distribution for products and services.
Yeah, to be real clear about this is not the chain of 7-Elevens or Circle K's, or this is little independent, maybe they got one or two shops, but they're small time operators, right? They don't have the distributors that are coming by with those big, and packing their shelves for them and doing all that stuff. They're not big enough to be that, right?
Right. There's a couple of reasons why. Number one, I always prefer to work with an entrepreneur who's out there working 12, 15 hours a day, fighting for his family. I love that because I've been there. And to a point, I still am there. But the difference is the guys at Circle K, Raceway, 7-Eleven, all those are national chains. And even if you have a little flexibility as a franchisee, you have planograms and modulars of how you set your shelves, how your stores are laid out. So leveraging a relationship with a clerk or an owner there doesn't benefit us at all. But when I go talk to Mr. Tim down at Tim's Quick Mart, and he has control and can do whatever he wants. I mean, my gosh, if we start selling trucker hats and belt buckles, he's going to bring them in because Tim's making a lot of money off of us and he likes us. And hey, you know what? Our sales guy comes around and sees him once a month. And, there's a relationship there. We're profit partners. It's a different mentality. And I also think, getting down the road 3 to 4 years, when you start looking at value and potential exit strategy, well, if we have large chains, that does have a value. But anybody with a coat and tie and a checkbook can go in and sign a chain and sell their product to a buyer at a big, huge network of stores. To go out there and pull every single mom and pop door, to build that relationship, to get their checking accounts and be a functional profit partner. And we're the ones that's building this digital railroad out into all these rural areas, off the beaten paths, especially with the growth of the Hispanic stores and the tiendas. Keep in mind, we have our operations and support center in El Salvador. It's bilingual. So, we're primed to be able to provide these services to the Hispanic stores as well. We do think there's going to be a significant value metric for our company by not only having all of these independently owned stores transacting on our network, also the data that we're able to collect through these independently owned stores, the data on the underbanked, underserved, and let's just call it under-digitized market because they're transient. There is no Nielsen, there is no data silo to trying to figure out the underbanked, underserved market. So we feel like we're going to be a market leader in being able to collect that data. And I don't want to say store that data because we're not a data company, but we are a transaction company that provides services to this target market that does not have a digital thumbprint right now.
And that's an absolute fact. And that's one of the things that we have talked about. We talked about before we hopped on, that essentially you're collecting data on a group of individuals that can't be collected. No data can be collected because they don't have a bank card, they don't have a credit card, they don't have any of those things to be even. They're dealing with cash, right?
Yeah, I think all the traditional mechanisms and instruments that we all use to facilitate convenience in our lives, which actually is being used to calibrate our digital thumbprint of who we are, where we go, what we do. Unbeknownst to us, sometimes we're just happy for the convenience, happy-go-lucky, and don't realize what we're doing. But yeah, these customers don't have that convenience. But the flip side of that is these companies don't have access to the data on these customers. Who are they? What are they spending? What are they buying? Where are they? That type of thing is not readily available as it is for us. So we do see that as being, again, a metric and a contributor to our overall value. And even when you look at, hey, market cap comparables here in a couple of years, once the market, we know we got to be on the market for a couple of years and establish who we are, get our footing, provide quarter over quarter, year over year growth, and show who we really are and what we're doing before we can be evaluated amongst peers, and then realize the multiples of 15, 17, 21x that folks in this sector are realizing, those who are not new to the club like us. So those are the things that I want to definitely have in place when that moment comes, when the spotlight's on us and we're able to see a true valuation based off of who we are, where we come from, where we're going, and then, seeing that market that we're servicing. And I think plowing through the market at a time when it's chaotic out there. I hate using cliche, but blood on the streets. I think that, I expect us to be rewarded for this over the coming years, and showing that, hey, we can operate in a turbulent market and we can damn sure operate in a fantastic market. Our market is really underneath that water level of being affected by all of this chaos. So I think that there's a value there where you show you're not seasonal.
Yeah, I mean, if you're growing your business, and that's why I said this non-dilutive financing deal was such a big deal, because if you're a small cap company and you need to raise capital, then you're going to get a shitty deal. I mean, it's going to be a bad right? I mean, it's going to be a bad deal, and it's going to be hurtful for the people that helped the CEO or the founder of the company bootstrap their company and get that thing off the ground. And it's going to be a painful experience. That's why some of these guys when I meet with them, they look like they haven't slept in a couple of months, right?
Hey, it's right. Hey, I looked at them all, and Tim, that is the man. I don't begrudge anybody, and I wouldn't judge anybody for signing the dotted line on some of those term sheets, because when you see those numbers and like, hey, $10 million can fund in 5 days, just sign here. It does. Hey, it'd make my life easier. If I just had a job and I was a hired gun to be, hey, we need you to lead this company into the light. Well, man, I'd have signed it in a heartbeat, because I could have grown the business faster. I could have grown it more efficiently. I could have got a heck of a lot more sleep, but it wasn't the right play for, let's put the ball cap on the shareholder. It wasn't the right play for the shareholder of the company. So, I think that's something I've never have been a huge investor, because I got my butt kicked investing in public companies. I wasn't as good as you guys. But one of the things that I would look at now is, is the CEO making decisions as a shareholder too, or was he brought in as a cleanup guy, or as a hired gun, like we said, an assassin type, a mercenary, or is he really invested and got flesh in the game? And, look, I know I make decisions sometimes that, not everybody's going to agree with, but just, folks got to know, man, I really do mull over this stuff, and it really does. I do build out the net model of business cap table. And then, where does this make us, or where should this put us as a company?
Yeah, I don't think that, I think a lot of people that get involved in the markets, I mean, look, you're focused on growing your business. Growth consumes capital, right? Until you get to self-sustainability, but that's the goal. And you think, or you're courted by a lot of institutions that come across as they're your friends and they're your partners, and they want to help you achieve your goal. And it isn't until you learn firsthand that, well, that's not always the case. I'm not saying every financial institution out there is a scumbag, but there are some that are scumbags, and they don't care about your business. They don't care about whether you live or die. They just want to do a transaction. They want it's basically a sale, or that's all they care is about collecting their fee and getting paid. So you just have to, and you don't learn that until you go through it, right? You go through it, and then it's like, wow, I never thought it would be like this, but it is. And and now you're in a market where you've got rising interest rates. Everybody's talking about a recession. This is the most well televised recession on the planet in the history of mankind. Everybody knows we're going into a recession. It's and I happen to think that when everybody knows that it's going this direction, it probably is not. There's a high likelihood that maybe this isn't as severe and as bad as everybody thinks it's going to be, right? I think the Fed's been pretty aggressive already. That hasn't even worked its way through the system yet. You got Carvana missing their numbers by 40%. I got homes that we were averaging 1,600 homes here in Las Vegas for sale. That was like 2 or 3 months ago, and now we've got over 8,000 homes for sale.
Yeah,
in a couple of months, right? Things are slowing down. Things are changing, and he could overshoot and have to do quantitative easing pretty soon. I mean, who knows? There's a lot of variables that nobody knows, but everybody is concerned about the uncertainty. And if you even look like you might have to raise capital, you're getting punished, right? Well, you've kind of taken that off the table. I mean, that's no longer an issue.
Yeah, to comment on both of the things you talked about there, no, I have no need for capital whatsoever now. The only reason I would need capital would be to buy new devices, because I was outrunning, my existing capital. But the way that this instrument and facility was set up, I'm incentivized to grow my customer base, because with every customer I add, I just increase my borrowing base. It goes hand in hand. So it's very, very unique, and very, it definitely fits my blood type and my go crusader mentality on more. But, you talk about the economy and home sales and all these other indicators, and I can't tell you the peace that I have Now, I never wish ill. I will say this. Obviously, I'm an American and I benefit from a good economy on a personal level. I never wish ill on the economy, but the peace that it gives me to where I'm not affected by any of that. I'm not affected by home sales. I'm not affected by interest rates. I'm not affected by anything that would go on out there. Again, we don't want people to be in despair, things to be upside down, or people lose their jobs. That's not what I'm saying at all. But what I'm saying is we're not affected by that. We grow the company just the same, no matter what's happening out there. So now I do want things to get going bananas again and get a red hot market here in the next year or so, because I want to see some of that irrational exuberance in our valuation. I want to ride the wave, man. But hey, that's what's cool right now. We're separating from the pack in a tough time. So when that waves hit, we can be in front and surf the wave. That's what I've been telling my guys. Hey, don't pay attention. Hey, $5, $6, $7. I don't care about that. That's not where I think we should be. It's definitely not where we're going to be. But let's be in the front of the pack when that whoosh comes in, and let's grow our market cap now. Let's do everything we can to. I realize a lot of people don't have dry powder right now because they're upside down in so many of their positions. That's fine. The powder they do have, let's incentivize them to throw at us, and let's do what we can to make them comfortable with us and our growth model. And so that's really what I'm spending my. You talked about how things have changed. Of course, yeah, I've got every bank out there that would service the small and mid cap. Not the mid cap, the small and micro cap is now reaching out and wanting to be friends. But like you, I realize what friends means. Friends is not a term necessarily. It's a term of opportunity. But hey, I know. I wave the flag of the CEO. I know what my responsibilities are. I know the gauntlet that I have to run. And but no, as a matter of fact, there was a new bank that emailed me this morning. Definitely interested in talking. So I fortunately I've got a really good team we've built that can protect my time.
So let's talk about that. You just brought in a new executive to take over.
It was the store side. If you look at our company right now, we've got a telecom side that goes direct to consumers.
Yeah.
It's got over 200,000 households, 200,000 subscribers that we provide wireless broadband, internet to. And on the other hand, you've got Surgepays, which is the fintech software platform we talked about at the convenience store. Now, up until this point, I've basically been, on this stuff and every energy pill, herbal thing that you could imagine to stay awake, because I've been managing both channels. Now, thank God I finally got to the point. And I do have a growth model of almost kill yourself, and then you add the person. You grow till you bust at the seams, then you add that person. Because if you don't, you add a person that you may not be able to afford, and you overspend, or you add a person who's not necessarily qualified to run the company that's going to be where it's in a year, in 6 months. I want an all-star coming on, man. So I got to be able to, there's a timing. Everything is a chess move. So we brought on a gentleman named Jeremy, been in the dealing with the prepaid industry, even going back to convenience stores now for, almost 20 years. He's almost like hiring a 2.0 version of myself. So, which is my goal. I mean, I don't want to sound conceited, but that's my goal. I mean, I have a hard charging DNA. I mean, you talked about the O lineman. I tell people right out of the gate, I am a maniac. I am. I'm demanding. I'm fiercely loyal to people that will come and work with me, though. But I am demanding. You will get emails at 1, 2, 3 o'clock in the morning. Doesn't mean you need to respond then, but you will get them. You will get them on the. You work around the clock with me. You navigate. You draw toward me in my style. I'm with you. I got your back, and we can all go make a lot of money together. So I tell them that, and my interview with Jeremy was very, very simple. He already came highly recommended. I was like, hey, three things, and that's all. I want more stores transacting on our network. I want more sales per store, and I want more margins per sale. That's it. And you're incentivized? No, that's it. I said, I'm going to incentivize you to make, as much money as you could ever spend if you get me those three things, because those three things equate to Surgepays, equate to revenue, profit, growth, and then the perception of our growth. More stores, that's a metric that we're going to be judged by. More revenue, obviously, more profit. So all of those things, I'm working now, building that team of people who are not just great at what they do, but they're incentivized where it's aligned with me, Brian Cox, who's not just CEO Brian Cox, but shareholder Brian Cox. So that's really, again, there's no books out there or quick help things that you can read on how to build a great public company. So I'm building it the way that, I'm taking advice, input, and I'm building it the way I would normally build a business to make millions of dollars. And then meanwhile, trying to do my best to align the folks out there and, hey, taking time or, to talk with guys like you to create awareness of what we're doing, and put these two things together and yeah, man, make our run.
I think there's one point that I really want to highlight too, is that yes, you may be demanding, but you're also humble. You don't think you're the smartest guy in the room in every room you walk into, right?
No, as a matter of fact, and again, you've heard me say this before, and I think I said this earlier. I don't want to be cliche, and I don't want to be to say you want to be the dumbest guy in the room. That's not true. You don't want to be the dumbest guy. By the way, anybody that says that is not telling the truth, and they're caught up in their own cliche BS. It's not true. All that LinkedIn garbage that you see, where it's mainly disgruntled employees just sharing crap around each other about how bad their bosses are, man, that's not true. You can't be. By the way, if I went to work for you, Tim, yeah, and you go tell everybody you want to be the dumbest guy in the room, well, hey, man, this guy's telling me to run through a brick wall and then crawl over fire coals with him. He's the dumbest guy in the room. I don't need head scratching. No, I have a certain level of intelligence, and I am a subject matter expert in the underbanked, underserved, and in telecom. I know my spots that are weak, and I'm not going to spend 24 hours a day reading or studying. I'm not a studious academic guy. I'm gonna watch it with my own eyes and build a team guy. Hey, go back to football. I could catch a ball and I could throw a ball, but by God, I couldn't throw it as good as the quarterback. So let me just knock people down. So that's my business philosophy as well. I know what I'm good at, but I also know where my my weaknesses are. And that's what I try to surround myself with. So humble is a good word. Yeah. But no, I definitely want, my God, what CEO on planet Earth doesn't want his CFO to be smarter and more diplomaed and academic than him? Or your attorneys, or your guys giving you advice on instrument? I don't know. Of course you want those guys to be extremely intelligent. And I don't beat my chest at all. I just like, hey, this is the way we're going to go. This is the way the company is going to go. If you're on my team, you're going to follow me. And this is what we're going to do. And I think, you talk about the things we've executed. I think that's why we've executed, and that's part of it. There is no plan B. There's no option for plan B. We have to get this done. And there's always a way to get something done, or it wouldn't have been a business model or business plan to begin with. And it wouldn't have made it off the drawing board. So I think that's philosophically one reason why we've executed things, and we also stick to our guns. Again, there's certain ways to do things in life that are easier than others, but they don't lead to the same rewards. And, I'm definitely trying to do my best to maximize the rewards of what we're doing with Surgepays.
So you're growing revenue. Are you profitable yet?
That's you're asking me a question that's put me in a tough spot, because we're right at that teeter-totter right now, where if we weren't growing as fast as we were growing, let me rephrase that. If my focus was on being profitable, I'd be profitable right now as we speak. My focus is on getting to 500,000 subscribers as fast as I can. And with a front-loaded expense model, and this is important, how it's reported, with all the expense being front-loaded into month one, the cost of the device, the commission that we pay people to enroll folks, all being enrolled in the first month, being rolled up, that expense being stuck in that first month. Reporting wise, we're just right at profitability, just a hair under a hair, really a rounding error. Again, if we're in private business, we're high-fiving because it's going bananas right now. But in the public reporting, right there at that, maybe red, maybe green, back and forth teeter-totter. But that's where I say sometimes, the reporting, while in effort to make things transparent, is transparent from a perspective of the books, but maybe not as transparent from a perspective of the business and the execution of your model and what your intent is. So again, if I turned off the lights and said, everybody go home for the month of December, We come back, we've profited, not made, we've profited in the bank over 3 to 3.5, maybe even $4 million. So to me, the answer to your question was, how can you say a company like that's not profitable? And I'm talking about paying salaries, paying all our expenses and everything. But when you're pouring it back in to growth, that therein lies a little bit of the reporting challenges. Now, when you're in an established industry where, let's say the ACP mobile broadband business we're in had been going for 5 years, and there's a track record where for sure how long a customer lasts, and there's a rinse repeat model out there. Well, then your auditors will allow you to, I call it amortized out or expense out over an estimated life of the customer, that cost per acquisition. I don't have that luxury in the reporting world right now. So we hope to maybe next year sometime get into that and convince our auditors to allow us to do that. But right now we're not able to do that.
Okay. Do you see any other potential catalysts before, the end of this year?
I think what I've got Jeremy doing right now, and again, he's the gentleman who's running the fintech side, adding stores. I don't know that people fully grasp the power of having stores to enroll folks in a free subsidized internet program is going to be. My first company was home telephone service, and I was able to see if you incentivize a clerk to do simple things like this for you, what the exponential numbers can mean. And if you have thousands of stores out there, just doing a couple a week, the math gets staggering quickly. And then you say, hey, but I'm also going to use this as the catalyst to add more stores, more customers, and then I could get more salespeople to add more stores. I think we're also going to look at buying small networks of existing, let's just call it from existing companies doing transactions, prepaid wireless transactions, reloadable debit card transactions. There's a lot of companies out there who have plateaued a little bit. They've kind of reached that, it's hard to send sales guys out and call on town, stores in towns, running routes with gas, as expensive as it is. And then also people are expensive now. And if you're only doing 1 or 2 products at that store, and there's some of these essential financial service products don't have big margins. It's just really, really hard to make money if you're paying salespeople a ton of money and the gas and all that. So they've plateaued. I'm hearing it, so we're in talks right now with several folks who either want to parse off certain networks of their business or in total. I think that could be a good, let's call it like, I used to play the old game Chutes and Ladders when we were kids. That'll be a good ladder to shoot up in revenue, where I'm basically acquiring someone else's revenue with their network of stores. But now we can drop all of our products and services and our much higher margin ACP and wireless products on what they've already built and leverage that relationship. So I'd look for that in the very near future. What is it? Almost the end of November here. I'd look for that and see what we're able to accomplish for the end of the year.
Well, I'll tell you what, man. One thing I can tell you is you don't lack confidence.
Yeah. Well, I've already seen the future, man. I've already built it out. I know what's coming. I know what's going to happen. And hey, you know what? At some point, people are going to start believing me. I told people we'd get this to NASDAQ. They said, you'll never do that. I told people, hey, we're going to get a funding, that and it's going to be tens of millions, and it's not going to be dilutive. You'll never get that in this market. You're crazy. So either I'm crazy or everybody else is crazy. But is it confidence? Yes, but also experience and wisdom and knowledge.
And then it's execution. For anybody that's asking, that's really what it comes down to: does he do what he says he's going to do? And the thing is, things always take longer than you anticipate. I don't care what it is. I've been in the markets for over 30 years. Sometimes it takes the markets a lot longer to grasp onto a concept than you. It seems so obvious to me, it can be brutally painful. But there's Warren Buffett, I think it was, that said the stock market is a very effective tool from taking wealth taking money from the impatient and giving it to the patient, right? And sometimes you just got to be extremely patient and understand the story, understand what's happening with the company. And then again, going back to, do they do what they say they're going to do? Are they, are they changing their story every couple of months? Is it going to be something different? Are they hopping? Do they go from a cannabis company to a, whatever's hot at the moment company, or they've been singularly focused at what they're planning to do and where they want to dominate. And I think you've been pretty consistent about that for as long as I've known you, right?
Yeah, we do have opportunities to add verticals. As we're growing here, we've got these stores we can distribute products through. I mean, I do get approached all the time by companies who have pretty good products, good margins. They just don't have any distribution. And there is a time and a play, but that's not my focus. That's an add-on. Now that is a position, and that will be that person's focus. And that will be something that I think we can really do well off of. But to your point, I'm not going to sit here and go from, being a cannabis guy to a mushroom guy to, I don't even know what's next. First of all, that's not the way if I can make money doing that, I do it in a heartbeat. I don't know how to make money that way. I'm an old school Excel spreadsheet guy that builds the pro forma, the month over month over month over month, and then the net cash at the bottom. Old school guy, drag the formula down, execute the numbers at the top. It all extrapolates down. As long as you keep your retention right and your margins right, those numbers happen, man. And you said about the confidence. That's one reason why I get my confidence. My confidence, and sounds funny, is completely based on Excel, because I've ran the numbers. So, if I had a time machine and I could go 6 months from now and come back, I'd be absolutely confident in who won the Super Bowl and everything else. Well, that's the way I feel about what we're doing as a company. I can't control the stock up and down or the market craziness, but I can control our sales, how we spend our money, and how we execute the business plan. And a word that you use, I don't know that I'm as much patient as I am disciplined. I think that's a big word I always stress in our organization. Discipline, discipline, discipline. Stay focused and discipline. And I think that's one thing that we've shown this year in what we've done. There's been even acquisitions or things that we could have pulled triggers on that just didn't make sense. One of my old mentors, when I first got my first lesson, if you want to call that, I was asking him a question, and he walked up to my grease board I had in my office, and he pulled out the marker and he said, "If it don't make sense, it don't make sense." And he spelt it, CENTS, and then, with the S. And I'm like, old country guy. No, old country guy who started with nothing, didn't even finish high school, that, was worth $10 million to me at the time. That guy might as well have been, Elon Musk. It was the wealthiest guy that I knew, in Bartlett, Tennessee. And I was like, man, something is so basic is that, you can apply. So I think your discipline, you don't get caught up. You've got a lot of, you're surrounded as CEO with a lot of consultants and a lot of people who have interests in their own ideas. And so I'm constantly getting pelted with acquisitions or products or ideas or things we should do for IR, and a lot of a scurrying, if you will. So, even the discipline on my own time is something I've really had to work on, time management and prioritizing. And, one thing I've learned over the past year, Tim, is, and at the risk of hurting people's feelings, just saying, no, I can't. Sorry. No. I think that's a very powerful word that we've, as a culture, are afraid of hurting everybody's feelings because everybody's such an emotional pansy now. But just to say no, and you know what I'm talking about. We've met in person. We share some of the same beliefs on you go out and you conquer. And like I said, you're the name Alpha Wolf. We think there is a mindset to that, but just saying no, hey man, I don't want to hurt anybody's feelings, but I can't. There's only so much time. There's only so much we can do. And I have a job to do, and I have to execute this plan. So, so patient and discipline.
Yeah, I agree with that. I agree with that 100%. Real quick, I want to talk about the chart,
Sure.
Which is actually looking pretty compelling at the moment. And there are a few reasons why. You got the 50-day that's above the 200-day. That's the golden cross. The opposite would be the death cross. So that's positive. And you can see where the stock has come into this resistance point a bunch of times. We come up into this area right where you're at right now today, And that's what, just about just over $6, 620, 650 in that area. You have yet to be able to take it out effectively and then have that turn into your base, right? So that's really what the technical guys would be looking at is, can you close over that and then have that be the floor, right? And maybe you consolidate above that area. And I actually like consolidation, because the more consolidation you get, it's like a compressed spring, right? Eventually, I call it a launching platform. The wider that platform is, the higher you go with the launch. So I don't mind consolidation, right? But what is interesting is you've got a long-term chart trend line, which is clearly down because you had a bunch of lower highs and lower lows. And now you've got this base that you are putting together. And if you listen to what you're saying fundamentally, and you take a look at the fact of where you are positioned, that would make sense that when, maybe this long-term trend is about to change from a downward long-term trend to an upward long-term trend. And when you have a little float like you have in this company, it wouldn't take a whole heck of a lot to launch this thing, right? So listen, I'm not telling anybody to buy the stock. It's not what I do. What I do is I try to find companies that I think are undervalued for what they have. And I'm telling you, in this environment right now, there are some good companies that have done some pretty amazing things, and they have not been rewarded, right? And I do think at some point that's going to change. This too shall pass, and we will get back to some normalization. And the companies that have been able to grow their business, not ruin their cap table, and have done what they said they were going to do, I think you will get rewarded. That is my belief, right? And the chart is indicating that is potentially about to happen. So if you don't want to buy it today, don't buy it, but put it on your watch list, because I think you want to continue to see if Brian here continues to do what he says he's going to do, right? I think there's a good opportunity here. So, Brian, what I want to do, I want to thank you, first of all, for coming in and kind of sharing the whole picture. I could talk to you for hours. But, I'm going to let you get back to doing what you're doing. And when you have something significant, maybe we have you back and do a follow-up. We waited too long to do this follow-up, but I want to, when something, maybe right after the first of the year, we look at doing another one.
I think that'd be good. Let's do that. And I always enjoy talking to you, Tim. And I think, as it relates to the charts and all that, hey, I'm going to do everything I can. And on my side, I know I can't control the charts or the impact of the ups and downs, but what I can control is the execution. And what I always tell folks is, look, I've got some targets here. And, if where we are right now, we blow through 100 million in revenue this year. So we more than double our revenue. And I expect to, more than double next year. And I've got a runway now to continue this trend for the next year or two of this substantial increase in growth. And then all the while becoming profitable, becoming debt-free. That's what I ask people. When people ask me, well, where do you think you should be? I kind of flip the question. It's like, you guys are the experts. Where do you think we should be? If we're, our revenue is going up over 100% a year, doubling every year. We're profitable, we're debt-free, our cap table is clear. There's going to be no preferred, we've got a preferred class that's basically a voting class. I'm getting rid of that in the next quarter because it doesn't matter. It should have been done in the uplist. It was just it was forgotten to be done as a checkbox. It didn't get checked in the uplist. But just, there's no reason why, I've tried to eliminate any reason why someone would be turned off at what we do. I think that I've sanded off any kind of rough edges on the company. And as we continue to grow and have this clear path in what's unique now the two channels of the company are kind of merging, where it was just telecom and then the fintech C-store transactions. Now that we've kind of married those two together to grow, it is going to grow in synergy, and you are going to see a pretty substantial impact of not just, 1 + 1 = 2, but 1 + 1 = 3. And I think it's going to be a really cool story to tell well into next year. I think we're going to have some cool stuff to talk about here in January.
All right. That's awesome, Brian. Thanks again for taking the time. I know I'm following the story, and I think others should too. So the chart, the whole story, it's good stuff, and I can't wait to see what happens next.
Hey, thanks a lot, Tim. I really appreciate it.
All right, Brian, hold on one second. Hey there, folks. Thanks for tuning in to another CEO interview here at Alpha Wolf Trading. Today we had a follow-up with Brian Cox of Surgepays, ticker symbol SURG. I hope you enjoyed today's interview, and if you did, please do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.